Hey guys, welcome to another Stock Talk. Today's May 8th at 4:37 p.m. Eastern Time. Thank you everyone for your comments. I think creating a positive community here is very instrumental, as well as, you know, getting good trading habits. I feel like our community is growing, and a lot of you guys are providing really nice call outs, tickers, and just creating a good vibe. That's my whole purpose of creating this channel. Let's just create a positive atmosphere so that when we learn, as we're a beginner or intermediate or advanced traders, that we make our best decisions without our emotions impacting us a lot, at least. So let's look at SPY on the 180-day chart, tracking the S&P 500 ETF. I like to use this chart as the general market direction. I actually use many charts, but this is the primary go-to. We know that SPY has been making lower highs, shown by this this line that has been trending downwards, and now we've put a circle. This circle does represent the potential in which SPY could reach this area, which is the overall bearish pattern, zooming out, which is the 180-day chart. What do I mean by that? Well, that means if we do manage to hit this resistance at some point, you know, it might be tomorrow, doesn't have to be tomorrow, but if we do hit this resistance, we're looking for either a break of pattern or a continual trend downwards. And this is downwards to around the 250 area, 255 area, around there. So are we going to get up there for certain? That's certainly not for sure, because if we zoom in on the current you know, horizontal action we've been talking about, this horizontal action, we've identified a resistance at 268, a support around 261.50. The resistance is as such because of the gap down area. You guys can see that this is when we gap down. What does gapping down mean? Well, this just means that when we try to push up, if you can see it better on the 1-year chart as well, but as we push up, we met a nice resistance at this area. You guys can see it, which led to this massive sell-off. This was the gap up area, which is functioning as the current support. So extending this line to the right doesn't mean that we're going to do this forever for the next week or for the end of this week. Doesn't have to do that. But as you can see, we are still trending downwards, at least right now, but we are keeping over the 20 EMA. Keep that in mind, because again, we don't have to come down. We can still come up and test this red circle area. So recall yesterday, last video, we talked about potentially start releasing a little bit of your position as we move forward, because we were nearing the resistance, and you can see that the long-term bearish pattern is getting closer and closer. So the potential for profit is getting less and less as you hold these stocks that follow the market. Looking at SPY, well, SPY didn't really do much today, but that's actually a more bullish sign if you think about it. We were expecting it for it to come down. We're holding over the 20 EMA. This is actually a slightly more bullish sign that we were able to consolidate at this area today. Looking at the 4-hour candle, you guys saw the exact same thing, right? People thought that we're going to start selling, but we actually had a pretty nice pushback on the last 4-hour candle that formed. So looking at TVIX, which tracks volatility, looking at volatility, we have identified a support around 667. Note that today we are still tracking under the 20 EMA. We're still at the support. So once again, you know, this is still downtrending. So as SPY manages to push higher, if it does, we're looking for volatility to keep falling. So you guys can see how volatility reacted. The markets were generally neutral today, but volatility went down 1.4% nearly. Recall yesterday, I think TVIX went down 1.4% as well, but the markets were like pushing like 40 or 50 points higher. So think about that. Today, the markets were even and volatility went down 1.4%. So that does tell a small story. Doesn't mean that market will be bullish, but the general trend right now is that we are a little slightly more bullish, at least for the time being. Look at 4/CL, which tracks crude oil futures. We talked about this trend as well. This is really interesting what happened in the last 2 4-hour candles. Right, we talked about a break over the resistance, which was at 69.37, and that the new resistance is at 70.81. So when we had this massive down spike, met by this massive, right, recovery on the 1 minute chart. You guys see that? Massive recovery on the 1 minute chart. What does that tell you for crude oil? All right, the story hasn't changed for the past month, I don't think, and is such that crude oil is still bullish, right? Looking at the 1 year chart, this looks even better for crude oil, to be honest. This looks so nice. This is the 20 EMA. You guys can see that we tested the 20 EMA just to bounce all the way back up. That's a pretty bullish sign for crude oil, at least for now. So looking at GUSH, which just followed crude oil, right? Look at this. We pulled down, formed this, you know, this doesn't look very good yesterday, but this looks much more promising today. Recall yesterday, what did we talk about? We talked about a fluctuation between the support and the resistance. And today, what happened? Look at the body of the candle, right? The tail of the candle obviously tested the 20 EMA, but the body of the candle stayed above the support, around the support, and the resistance is around 36.18, right? So what does that mean? That just means that we found good buying points today. If you guys bought in at any point around here, right? When we talked about the support around 33.30, if you guys bought in at 33.30, and you guys could have bought in around here when it was pulling up, it doesn't matter. All right, look at the 1 minute chart. If you guys bought in anywhere around here and you looked at the major support, like right here, right? This is the major support. That might have been a good time to buy in. And you guys can see that we're currently trading at 35.60 around. So where we closed. But all I'm saying is this is a predictable pattern. GUSH is on the uptrend. So I talked about, even if you're a beginner trader for crude oil, if you bought in at 35.50, I think that was the scenario we talked about yesterday. Even if we bought in at 35.50, look at where we closed today, 35.60. We actually still ended nearly even or positive despite this massive downtrend. This is why it's safer to go into GUSH and less safe to go into the ticker called DRIP, which is the inverse of crude oil. And you guys can see that even though you know, DRIP on the 180-day chart did start going to the going up, right? That didn't really mean anything as we got rejected by the 20 EMA on the 180-day chart just to come back down. GUSH has been a solid play for the past month, and it continues to be a solid play for the current future, right? So we talked about DRIP on the 1 year chart in such that every support we break, a major support, we kept moving down further. As a matter of fact, let's take a look at, we moved down 18% before we started recovering. Here we went down another 18% before started recovering. This was the major support. Here, this is a major support, and we kept going down 20%. So once again, we broke the support here. We're looking at, so far, we've declined around 16, 18%. Again, what that only means is we're still on the downtrend, at least for DRIP. Looking at /GC, which tracks gold. Gold didn't really move much today, as you guys can see. We talked about gold support around 13.12, and JNUG, which follows /GC or gold, kind of has been reflecting that, right? JNUG today, looking at JNUG, went up 0.74%, which kind of reflected the small increase in gold. We talked about a potential gold reversal. Again, gold is looking bullish again. Look at this tail candle, right? We tested the 200 SMA just to bounce up. Gold is still looking bullish. Looking at JNUG, which is the probable entry point, I want to show you guys the 180-day chart. You guys can see that, you know, we're still making this higher low, right? And we still have the potential to retest 1630, possibly even higher. But this is just something to watch, because as /GC pushes up, I do expect JNUG to continue going higher. Looking at /natural gas, tracking natural gas futures on the Thinkorswim platform, we talked about natural gas having a support, this right, ascending support around 2.719. We were asking ourselves, was this a support? Look, we just confirmed that this was a support today. This trend line was actually drawn in yesterday, so I didn't draw in this yet today, but you guys can see that natural gas still remains a little bullish, at least at the support. So natural gas Even though it went up, okay, actually went down a little bit, but we did have this push up on the last 4-hour candle. Natural gas did go up just slightly. It didn't really move that much, so there's really not much story to tell on this one. But we do see that natural gas, or UGAZ, does have a potential now to start trending up. And you guys can see that we were at the support. If you guys were to buy in around $54 or lower, that would be a good entry point, as we can minimize our losses and maximize our gains. Okay, I think we talked about DGAZ yesterday as well. It's just DGAZ, you guys can see that it's been making lower highs. And yeah, so I kind of changed my outlook for DGAZ just because you guys has... Why did I change my outlook? It's just because natural gas has been following this trend, right? Where we're making higher lows. That's a pretty good sign for natural gas. So again, we want to invest in things that we feel are certain, right? Like, the more confident position we take, the better, we feel about it. So ask yourself, are we that confident with natural gas? So I think that would be even though we know the trend, right? In my book, that's the least confident scale. Which one are we the most confident in? I think the most confident in among the commodities is crude oil, right? Because crude oil has been bullish, so every time it comes down, you know that that's a good buying point. It's been occurring, weekly, right? Weekly, every single day within the week, there's some sort of horizontal pattern or gush pushing up. So you know that crude oil remains a good buy because it's more predictable. Followed by gold, right? As gold reverses, that's a little more, followed by natural gas. That's just how I would see it in my book, and that's how I would invest if I were to invest in commodities right now. Obviously, I don't have any positions in the commodities right now, so I want to talk about my position in Square. So recall yesterday we talked about Square being potentially bullish, and we looked at the 3-year chart. The reason why we use the 3-year chart is because we see that the 20 EMA has been acting as a support every single time. And that every time it touched the 20 EMA, it's actually bounced up. And once again, we have bounced up. And we talked about Square having a potential bullish position this time around. So ironically, Square went up 4.3%, and we closed at 53.32. This is a very bullish signal for Square once again. So I'm looking at my exit right now, and my exit right now is probably around 54.91. That would be my exit. I could see it pull even higher, possibly 57, or even retest the previous resistance at 58.46. That just depends on what the trend does the next few days. So that's, again, a wait and see. But if you were to ask me right now, it would be around 54.91 as my potential exit, which is around $1.60 away. Again, it depends on Square. So if Square is trending up over 54.90, I might wait a little until the end of day or near the end of day before selling my position. But right now, obviously, on the 180-day chart, we've broken over the resistance around $52. So the next leg up, it might still come down a little bit before we start trending back up again, but we could still see another push to $54, right? So that's what I see for Square right now, which is actually a very interesting ticker. So let's talk about some of your tickers, right? So the first thing you guys called out was WATT, or WATT, which is Energis Corporation. Very interesting. So you guys can see this horizontal pattern, right? It's been kind of... Look at this. So is this a promising trend? I don't really like this trend. You guys can see that it is making lower lows, lower highs. Doesn't mean this will satisfy every single time. Of course, it can break this resistance, but just looking at this trend, and because we're on the higher end of the spectrum versus down here, I'm less likely to go into a position for this guy right here. And note that, we had some news that came out that kind of spiked it all the way to $34 before now we're kind of selling off a little bit. So yeah, so you guys can see this better on the 1-year chart. Again, we had a massive volume spike here, but then look at this volume. It just deteriorated as we're moving forward. There's no surprise that we're deteriorating because we're near the peak. People are thinking, should we buy or should we actually sell? This is not a very good entry point for this stock. So CAR, I think, is the Avis. Okay, you guys talk about Avis Budget Group. I think let's take a look at the 180-day chart. So fantastic. What a great call out, you guys. This one is going on my list, so let me just take a look. So the first thing I'm looking down is at the support point, which has been making higher lows, right? And you guys can see that earnings brought it down, found the support. Earnings pulled it up. Okay, nice. Earnings pulled it down. Have we found a support? So today was actually a very nice day. Why did I say very nice day? Because it did a double bottom, which means in tomorrow or the day after tomorrow, we'll start telling the story whether Avis will start, or if it has the potential to push up. Right, guys? This is very nice because should it start pushing up, we did a double bottom. Yes, it's, you know, it might still come down, do a triple bottom, but you know, I like this is, if it can push up, that's a good confirmation that we have found a support and that this higher low is still holding up. And so let me just take a look at the potential for profit. Right, so the potential for profit is certainly there, 8% or more. The potential for loss, depending on where you buy in, let's see if you bought in right now. Let's 2-3%. Yeah, so this is a good one to take, I think. If you guys bought in at the end of day around 43, 44, set your stop loss around 42.19, 42.20, and see what happens. This is a fantastic one to call out. Great job calling that one out, Avis. And as it if it does start trending up, this is definitely something that we can go into, I think. Obviously, you know, make your own decisions. I'm giving you guys just the analysis, but it's up to you guys to make your best decisions. Whether you see value in it is your money. So, you know, don't. You know, these are just patterns that I see. Doesn't mean that we will have to take a position. So, wow, this is another good one. Hold on, this is RTRX. This is really nice. Look at this, right? Same higher low pattern. We're making higher highs. I might even like this a little more than the Avis group. Give me a sec. Yeah, this is really nice. Okay, so the reason why I like the previous ticker is because it did a double bottom. I do like this one as well. It's just that we haven't done a double bottom yet, and this is not a very good entry right now. Note that when we started spiking over the 20 EMA line, which is the light blue line, we at some point had to retest it before it continues to go up. So let's wait on this one. Let's wait to see if it does manage to cross, and then once it starts coming down, and that's when we can take a buy position, I think. So looking at this, yeah, let's just wait. Let's wait for it and before it comes down and we buy into it. But this is really nice. If it does do a double bottom, again, if we do see a U-turn at the bottom, that's when we can buy into it. But not right now. Let's just wait 1 or 2 more days before we get into it. Okay, SHAK. So I think you guys mentioned SHAK in terms of getting, you guys put in a put. So, right. So that's really dangerous, right? Because you're betting on the information that this will come down. And if you guys did a put, well, today it went up another 4%. So let's take a look at the 3-year chart. So I do agree that we are overextended, right? And we are actually quite overextended over the 20 EMA, but we don't want to hope that something will come down. Especially you can see that as we're trending up, we don't want to hope that it might come down because we're so overextended. We want to start. So if you guys if you guys thought this was a reversal, just ask yourself, looking at the magnitude of the candles, right? Look at this magnitude of this candle versus this candle. This candle obviously outweighs this candle, right? So this isn't a confirmation of a reversal. If this was a confirmation of a reversal, we would see this candle being almost the same length as this candle, right? So it's still trending up. So just be a little careful on this one if you're doing a put, because this might be a little risky, more risky. Okay, SPXL. This is, the S&P 500 bull. Yeah, so this is similar to TQQQ, which tracks the NASDAQ. You guys can see that we're, again, nearing the 200 SMA, which has been acting as a resistance for quite a bit. You guys can see that even though if we spike over the 200 SMA, we don't get that far much above. So this one, we're getting to the 200 SMA. Let me take a look at the potential for, a profit. Yeah, see, it's not worth it versus the potential for loss when it can actually start coming down and losing 3.5%. I think you guys also called the inverse out. SPXS. Is that the bear? Yeah, so this is the bearish pattern. And you guys can see that for the bearish pattern, it looks a lot more convincing. Should you buy in at this point, you guys can set a stop loss around 1.4%, whereas the potential for profit could be 5%. So, again, this kind of follows the market. So if you guys, on the SPY, we talked about potential more bullish patterns. So I wouldn't invest in any of them right now, just because, this candle does look quite nice. So yeah. And then, yeah, I think we also talked about TVIX, and you guys were asking me, was it dumb to go into TVIX at $8? So you did get in a little higher with TVIX, which does track volatility, $8. It doesn't mean, you can see that how quickly volatility can spike up. Should it start falling, this will start rising very, very quickly higher. So, this is based off of your opinion, whether you're comfortable, but should you sell it now? I mean, we're at the support. I don't think you should sell volatility, not right now, right? Especially as SPY nears the resistance and TVIX is nearing the support. So thank you very much for watching this video. Like if you like this video, comment, subscribe, do all those good things to keep up to date with my releases Monday to Friday Stock Talk videos. I will see you guys tomorrow, Wednesday, for another Stock Talk. Happy trading, and yeah, you guys go do it and do your best.